It's Saturday, December 31st, 2022, the last day of the month, the last video of the year. Before I start the video, please make sure to like this channel, like this video, share these videos all over the place, blast these videos all over your social media, and make sure you subscribe to this channel. Also, I want to recap what took place yesterday in the markets. And I wanted to go over a few articles with you today. And also, I want to thank everybody for all the prayers, for all the great Christmas cards, all the donations. We'll make sure that that goes to helping homeless people. Just talked to Sid the other day. We're going to put something together, get out there, help some of the animals, help some people. So we'll put your money to good use. Again, I want to thank you especially for the prayers, the support of the channel. None of this is possible without you. So God bless all of you. Thank you so much. It means so much. And I feel blessed that I can do this and have gotten to know some of you. And please keep me in your prayers. So moving forward here, without further ado, stock market yesterday, Friday. Dow Jones closes down, I think about 77 points. NASDAQ, S&P, Russell, all of them down. This has been one of the worst performing years, the worst performing year since 2008. So that should tell you something right there when you're comparing anything to 2008, what's about to happen. Right here on CNBC, stocks fall to end Wall Street's worst year since 2008. S&P 500 finishes 2022 down nearly 20%. There was also an article I was reading yesterday. These 20 stocks were the biggest losers of 2022. The worst performing S&P stocks. Generac Holdings down 71.4%. Match Group Inc. down 68.6%. This is just a name. These aren't all of them. This is just a handful. Align Technology down 67.9%. SVB Financial Group down 66.1%. Meta 64% down. PayPal down 62%. Stanley Blacker down 60.2%. Carnival Corporation 59.9%. Warner Brothers 59.7%. Caesars Entertainment down 55.5%. This is just to name a few, ladies and gentlemen. Shareholders of these companies which suffered massive losses in market cap. Apple lost $846 billion in market cap. Amazon lost $834 billion. Microsoft $737 billion. Tesla $672 billion in losses. Netflix, $136 billion in market cap losses, and Walt Disney, $123 billion. You know, when I watched the markets on Friday, how in the world is the stock market, when you look at these numbers, when you look at the loss of market cap, when you look at some of these numbers year to date, what these stocks have done and how much they've lost, how in the world are we not seeing a major Wall Street collapse right now? We're seeing major Wall Street layoffs. We're seeing major losses in some of the biggest companies in the world, and yet Dow Jones only down 77 points yesterday. It's beyond me to tell me that things aren't manipulated, that these markets aren't rigged. You are drinking the Kool-Aid. Here's another one from the Hedge. Worst year ever for stocks and bonds. Global inflation fight burst the everything bubble. There was no Santa Claus rally. They were all telling us there would be one. They were hoping there would be one, and there was nothing. And think about how bad it must really be. With all the rigging and all the manipulation, still the worst year since 2008. Still, they couldn't get it to recover on Friday, even though it started out over 240, 250 points up on the Dow. Then the Dow was down 350, and they were trying to fight it back. I don't know if it's the plunge protection team. I don't know, but I find it odd when the market's down 340, 350, and all of a sudden in the last 15, 20 minutes, it's roaring back, but they still did not have enough gas to get it over the finish line. Traditional portfolios consisting of 60% stocks, 40% U.S. bonds, had the worst year since 1932. That was during the Great Depression. Over $7 trillion in stock market cap has been erased from the NASDAQ 100. U.S. equity and bond markets lost a combined $17.4 trillion in 2022 at their October lows. S&P this year was down 19%. NASDAQ was down 33%. Dow Jones down 8%. And, you know, that barbarous relic, gold, was flat. And I do believe we are going to see all-time highs in gold in 2023. And I believe silver is going to come along for the ride. So I hope you own some real money. I hope you own some real assets. Two of the most liquid assets on planet Earth. Two assets that have a 5,000 plus year history. I think 2023 is the year you better own real things. You better own barterable items. You better own essentials. You better own food. You better own water. You better own security. You better be getting yourself in shape mentally, physically, spiritually, and financially. 2023, ladies and gentlemen, I can't really say I do predictions. I don't like the word predictions because it almost sounds like, and I've used it before, but I'm going to take it back. I'm not going to use the word prediction anymore because it's kind of like we're going to sit here with a crystal ball and read into the future. I'm going to use the word forecast. Let's use the word forecast. Let's use data. Let's look at trends and let's think about what's coming in 2023. I think fuel prices are going up. I think food prices are going to go up. So we have fuel and food going up. I think the cost of living is going to go up. I think interest rates are going to go up. I think mortgage rates are going to go up. I think a lot of things are going to go up. As we also see things coming down in price too, like housing, like real estate, like land, like commercial real estate, residential real estate. I think all of this is coming down. So it's going to be a very interesting year where certain things are going to go up and cost more energy, and certain things are going to come down. I think car prices are going to be coming down. Used cars, even new cars, they're coming down. Energy, food, servicing debt, interest rates, mortgage rates, things like that are going to continue to go up. Here's another article from CNBC. Solana's slide accelerates $50 billion in value wiped from the cryptocurrency in 2022. It went from a market cap of $55 billion in January to $3 billion at the end of the year. Now, I think we're going to be seeing some very challenging times in 2023. That is my forecast. Again, not a prediction. I don't have a crystal ball, but I'm going to give you a forecast. I think we're going to see serious trouble in 2023. I think we're going to see problems socially and problems economically right here. And you've got to protect yourself. And I don't think putting, and this is not financial advice, this is my humble opinion, but I don't think putting money in a cryptocurrency at this point is the smart thing to do. I think most people have found out now that this is a massive Ponzi scheme, that you're not going to protect wealth in a cryptocurrency, especially as the economy continues to erode. I think that the FOMO now in crypto is done. I think it's over. And I do believe we've got to get back to simplicity. Gold, silver, even cash right now. These are going to be very, very important. And of course, as I said earlier, food, water, barterable items, skill sets. You know, one thing, people go, what should I be investing in? What should I be investing in? I'm not investing in this market whatsoever. Yes, I do own some mining stocks. They're extremely volatile. That's why I really don't talk about mining stocks. I don't sit here and tell people what stocks to buy, what junior mining stocks to buy, because I'm not going to take that responsibility. That's something that you need to do your own homework on, something that you need to do your own due diligence if you have the money to gamble. These things are gambles. Anything in the market at this point is a gamble. There are some mining stocks that I think are going to do quite well. Most of them are not. 90% of them are trash. That's just a fact. So you really got to do your homework and use money that you can afford to lose, because this is going to be a very volatile area to be gambling in. Junior mining stocks especially, very volatile. So if you can't lose that money, if you can't afford to lose that money, do not be putting it in any of these junior mining stocks whatsoever. If you can afford to gamble a little bit, then some of them might be worth looking at, but do your homework. But I'll tell you what, in my opinion, investing in cryptos is definitely one of the worst things you could possibly do at this point. This would be, to me, like burning your money. TheEconomicCollapse.com. The mega bubbles have started to burst, and that could mean unprecedented financial chaos is ahead. There is no doubt in my mind, and correct me if I'm wrong, let me know your opinion, the Fed is about to crash the housing market. It is working on it right now. It is going to do it. The Fed wants this because it is going to help deliver lower economic activity and inflation. That's what it wants this coming year in 2023. It wants to see more people unemployed. It wants to see this housing bubble burst. It wants to slow the economy. It wants to slam the brakes on this economy. So this is going to be a real difficult time for a lot of people. I don't mean thousands of people. It's going to be a very difficult time for millions of people. A lot of people are in jeopardy of losing their homes. They're in jeopardy of being evicted. They're in jeopardy of having their automobiles repoed. They're in jeopardy of having their credit demolished. And a lot of people are going to have, I believe after this coming year, after 2023, they're going to have a different standard of living as we head into 2024. So many people in this country have lived so far over their heads, and they're going to learn a very difficult lesson here. Most people did not put away, did not prepare, never thought that the economy would ever crash. It's unbelievable how naive and blind so many people are. We just had a crypto collapse created by the Fed with all the easy money. Get this, more than $2 trillion of crypto wealth has been wiped out. Less than $1 trillion is left. There's no way that this is not going to affect the stock market. No way that this is not going to affect the housing market. I mean, if you look at all this crypto money that has disappeared now, these huge losses and more to come, you see what it's done to the high-end luxury watch business. Prices have absolutely crashed. We're seeing now the supercar market slowing way down because all this crazy money, people were going out and buying $100,000 watches, $500,000 watches. They were buying $500,000 supercars and hypercars. And this is all now coming to an end. So these industries are going to have to adjust, but it's going to be a huge slowdown in housing, in the luxury watch business, in the super and hypercar markets and things of that nature, because this crazy money where people were actually taking this money like it was monopoly money, they couldn't spend it fast enough. I mean, think about just burning $500,000 on a watch, $500,000 on a car. Look, you know, if you can do it, God bless you, enjoy and have fun. But these people weren't looking ahead. They were spending it faster than they were making it. And they just believed that they would continue to make all this easy money in cryptos for years to come. And it was very, very short-lived. And now these people are going to have to sell the cars. They're going to have to sell the jewelry. And now they're going to have to go back to service sector jobs. Think about like somebody that was driving maybe like a nice Porsche GT3, maybe a nice Lamborghini, Ferrari, had a couple $100,000 in the bank, wearing a $200,000 watch. It's all over. They're going back to working a service sector job, having to sell the car. It's over. And it's never coming back. We are going to now go through some very, very difficult times. And people who made all this easy money, they're not going to like what is coming. The hedge, housing supply jumps most on record as market freezes. Redfin reports increasing inventory. The 4 weeks ending in December 25th, the total number of homes for sale jumped 18% compared to a year ago at the same time. Homes are now taking twice as long to go under contract compared to a year ago. I heard right now that builders are holding back inventory, not even putting it on the MLS. So there's actually more inventory out there than we're being told. And they're trying to double end these properties using their own salespeople to sell these properties in-house. And so we don't really even know how many homes are on the market because so many of the builders now are keeping their inventory off the multiple listing service. So this will be interesting to see how it plays out. It's going to be a war between buyers and sellers. And I'm going to tell you exactly who is going to lose here. You know the answer to that. The seller is going to lose because the buyer is just going to wait. And if you don't need a house tomorrow and you can afford to wait, you're going to win. You are going to win. Patience now is the strategy. Patience is a virtue, as they say. But if you can wait this out for 12 to 18 months, you're going to do incredibly well. I think if you waited out another 6 months, you're going to do incredibly well. The bottom line is this: momentum in the housing markets has stalled. Inventory is building up. Prices will be declining next. Here's one from CNBC. The Fed won't be what drives markets in 2023, wealth manager says. You know, take a look at what's been happening really over the last decade. But let's just go back to this year, 2022. What drove these markets? Was it the economy? Was it fundamentals? Was it profits? No, no, and no. It was the Fed. Nobody cared about anything other than what the Fed was doing. As long as the Fed was printing money and the Fed had rates near zero, everything was fine. Now that the Fed isn't here to help and save these markets, well, we're finding what the markets are really made of. They're made of nothing. They have no structure, no integrity whatsoever. A house of cards built on quicksand. Without the Fed, these markets are going to continue to collapse. We're going to see lower lows and lower highs. There is, in my opinion right now, no rescue. The Fed is not coming to the rescue of these markets. And many people said they would never raise rates. Then they did. Then, well, they won't do it again. They'll never go to 50. They'll never go to 75 basis points. They did. They did. And they're not done. The Fed is going to continue raising rates into 2023. They may do it at a lower rate. Maybe it won't be 75 basis points. Maybe it'll be 50. Maybe it'll be 25. But at the end of the day, they're going to continue raising rates throughout 2023. And these markets cannot, they cannot take another rate hike, whether it's 3 basis points, 25 basis points, or 50 basis points. These markets are going to begin to melt down. And no matter what, when housing goes, the biggest industry on planet Earth, when housing goes, it's going to take these markets down with it. And let's also not forget billions upon billions. We don't even know how many billions of dollars that these banks made on automobiles, where people now are defaulting. They're late. Loan to value, 140% of some of these vehicles. These banks are going to get absolutely slaughtered on these loans that they made. Now, who's holding the debt? I have no idea. Comment down below, maybe you know. Where did all this debt go? Where did the debt get bundled up and where did it get sold off to? Who's holding all these billions of dollars of auto loan debt? These banks are going to get absolutely destroyed. So we have a housing collapse. We have an automobile collapse. We're going to see massive layoffs coming in 2023. It's going to be more, it's going to be more of the same from 2022 heading into 2023, except it's going to accelerate at a much higher level. We're going to see more layoffs. We're going to see more defaults. We're going to see more inflation. We're going to see more problems. But again, the Fed is not coming to the rescue here. What if the plan the whole time here is that the Fed is going to just destroy this economy by raising rates, not coming to the rescue? What if this is all orchestrated by the Fed? Everybody thought, don't fight the Fed. The Fed's your friend. They're finding out now the Fed isn't their friend, and now everybody wants to fight the Fed. This is what I find interesting, is we got into this mess because the Fed kept rates too low for too long and printed too much money. And so the way to fix it, what the markets say, the way to fix it, investors say, well, the Fed needs to lower rates and print more money again. Well, isn't that what got us into this mess? Isn't this what caused all the inflation? Low rates, too long, and too much money printing. So how is that going to fix anything? That's just going to juice the markets for a short time. I'll give it a sugar high. But what's it going to do in the long run? It's going to devalue the US dollar. It's going to cause hyperinflation. And we're going to be right back where we started, but even worse. The Fed must stick to its guns now. It must get even more aggressive. It must raise rates much higher, more aggressively. There is pain to be felt here. Now, I know people don't want to feel the pain. It's the same people who took the easy money, who loved to borrow this money at next to nothing, didn't want the party to end, didn't want the music to end, these people now are going to feel massive amounts of pain. These companies, corporations, investors, they're going to feel a lot of pain. Nobody wants the music to stop, but if we continue, it is going to be lights out for this economy, for the US dollar, and it may already be too late. I don't think anybody really knows how much damage has already been done. Nobody really knows, because we don't know how accurate the data is and how much the data is being manipulated. We must go back to fundamentals and not into these markets where the Fed comes out and says one or two words and the markets, you know, go up 500 or 800 points in a day. We must go back to fundamentals. And the only way we're going to do that is by feeling a lot of pain. You know, if a person weighs 500 pounds and they're eating Twinkies and Oreos all day and Doritos and cheese puffs, and they're on their last leg, they're dying, and the doctor says, look, you've got to stop right now today. Today you must stop eating all this stuff or you're going to die. They're not going to be happy. These people are not going to be happy. They want to continue to eat. They don't care if they die. They're so addicted to food. But if they don't stop, they're going to die. And if this Fed does not stop juicing these markets and printing all this money, buying mortgage-backed securities and keeping rates next to zero, the patient is going to die, ladies and gentlemen. And now, in order to go on that extreme diet to live, to survive, the patient is going to be very irritable. The patient is going to be angry. The patient's going to be mad. The patient's going to fight it. But if the patient doesn't do it, the patient dies. And this is going to be a very, very difficult time, because people in these markets, they are the 500-pound patient who doesn't want to put down the bag of Doritos. Okay, they don't want to put down the bag of cheese puffs, but they're going to have to, or they are going to, this whole thing is over. The patient will die. These markets, the stock, everything is going to absolutely collapse if we don't go on a diet. So again, it's fun eating all the food. It's fun indulging in all this. It ain't fun when you got to go on a diet, because it's a life or death situation. And the patient now, these markets are going to be extremely irritated. Fox Business, IRS hiking interest rates January 1st for underpayments and overpayments. They're going to go from 6% to 7%. Someone must really hate us. How in the world can anybody catch a break now? It's taxes going up, cost of everything going up, and now interest rates are going to be hiked by the IRS for under and overpayments. They're going to hike it 1%. Nobody can just seem to get ahead. They just want to keep their thumb on you and not let you move. It's unbelievable. We will send money all over the world, but we will not send money to the people who need it, to the businesses that need it, to the communities that need it, to the homeless that need it, to people who are really struggling, who are really out there hustling and doing the best that they can. Why are we not helping people get ahead? Why are we not helping people who really want to work, who really want to open businesses, who really want to help this economy? And we don't help it. We're doing everything we can now to kill the economy. Building emergency savings is a top financial resolution for 2023, survey finds. This was on CNBC yesterday. A recent survey from the Personal Capital found 31% of respondents want to increase their emergency savings for medical bills or car repairs. 24% of this country has zero savings. Zero. Nothing. 40% don't even have $400 saved up. What happens is when the car breaks down, when they have to go to urgent care and it's $500, they don't have any cash. So what do they resort to? Well, they resort to a payday loan, or they resort to the credit card at 29.9% interest, and they can never, make this debt whole. They can never pay it back, and so the interest just keeps accumulating month after month after month. But there are a lot of people who just don't want to make the sacrifices in order to have that emergency fund. They go to Starbucks all the time. They're going to, you know, basketball games. They've got the Netflix account and all these other accounts, and you know, they just have money going out in so many things. You know, they're paying over $100 in cable every month, and there's so many things that people should be cutting out right now, but they just cannot do it because people just will not make the sacrifice. So they'd rather pay 29.9% when they need their car repaired. But a couple of things it mentions that you could do is reduce your monthly bills. So cut out, you know, those daily expenses like going to Starbucks, going out to lunch, pack a lunch. That's a good way to save some money. Some people are going to Starbucks twice a day, spending, you know, $15, $16 on their lattes going twice a day. Cut it out. It says, reassess your credit card habits. Those interest rates are only going to climb. Yes, we're going to get another rate hike at the end of January. So, you know, credit card rates are going to go up even more. Sock cash away every week. So if you can cash your check and, you know, you can put $20 or $50 or $100 a week away, whatever you can do it. And you know, in 6 months, 12 months, you're going to be amazed that you have a pile of cash. So when something does break, you have to go to urgent care because you need 20 stitches, or you know, the alternator on the car goes and it's, you know, $500 or whatever. You're not going to be in panic mode because you have the capital, you have the emergency reserve to take care of it. What happens is when people have an emergency and they have no money, they go into panic mode because they know they're going to have to go to the credit cards, and they've already gone to the credit cards, and the debt is going to get bigger and bigger, and they know they're never going to pay it off. And what is scary here is so many people now have, you know, 5, 7, 10 credit cards, maybe more, and they can't pay them back. They're paying the minimum, and they know they're never going to pay it back. And what's going to happen is they're just going to keep using these credit cards. They know they're not going to pay it back, so they're just going to blow through all these credit cards, run massive amounts of credit card debt up, and of course, file bankruptcy. So, you know, if that's the way you run your life, I don't think you're ever going to really get ahead. You're just going to, you know, file bankruptcy, have terrible credit for a few years, and start the cycle all over again. But you know, destroying your credit before we head into a recession or, a depression, very, very dangerous because you won't even be able to rent a room. I mean, think about like having bad credit during this time. You're not going to be able to take advantage of the opportunities, of the sales, the discounts that are coming, and you're putting yourself in jeopardy because with bad credit, you're not going to be able to buy anything that you need to finance. You're not going to even be able to rent a room. So do not put yourself in jeopardy. Another one, sell what you aren't using. There's a lot of things that might be laying around that you're not using, you're never going to use. So maybe it's time to get rid of some of that stuff and let somebody else use it. So, you know, raise some cash, getting rid of things. And the last one says, get a side hustle. Well, that's a no-brainer. You know, so many people out there have all this debt, and there's people out there with all this college tuition debt. And we hear about all these service sector jobs. Maybe in your area, there's no jobs available. I can tell you right now, in this area, there's tons of jobs. You can go to In-N-Out Hamburgers, and they're paying $18 to $21 an hour to flip burgers. So there are jobs out there. Maybe these are not careers. Yes, most of them do not pay 40 hours. Yes, most of them don't have benefits. But right now, if you have debt, you know, beggars can't be choosers. Go do something. Go work 2 side hustles. Go work 3 side hustles at, you know, $16, $18, $21 an hour. You could work 2 side hustles, 40 hours a week, and start paying down debt and start putting a cash reserve away. I mean, people make too many excuses, but they don't want to get off the couch and go do something. Yes, a lot of these jobs are not career opportunities. Yes, most of them are part-time. Yes, maybe it's not the job you want to do. But why sit there and sit around and let the debt keep accumulating with these high interest rates when you could go out there and be paying it down and putting some money aside? I don't get it. We just have a society now that just wants everything paid for. They want to sit at home, and they want the people who are working to pay their debt. So, I mean, look, I'm sorry that a lot of people went out there and paid $80,000 for a worthless degree. That's not my problem. That's your problem. So I'm going to wrap it up right there. I hope everybody has a phenomenal weekend. I hope everybody has an incredible new year. It is going to be 2023. I wish I had better news. I really do. I wish I had better news. I've said many times that I wish I was making car videos, driving around in a Ferrari or a Lambo, having fun, laughing, having a great time. A lot of people want me, you know, why are you so serious? Why don't you laugh? Well, if I was driving around in my Ferrari or my Lambo, I would be laughing and I'd be having a great time. This is not the time for that. Maybe somewhere down the road that will, you know, be something that will happen. But right now, with this much pain in the economy, so many people suffering, with 40 million people in November couldn't even pay their electricity bill or their utility bills. We had 41% of small businesses in November that could not pay their rent. So I'm sorry, I can't laugh, I can't giggle, I can't joke around. This is really, really serious business. And again, I wish I was making car videos and having fun. It would, trust me, it would be, you know, much more therapeutic for me. But maybe one day there'll be a time for that. But right now, to me, this is very, very serious. This is something that, to me, has to be addressed and something that we have to talk about daily, because there's so many moving parts and so much is happening every day. Every morning you read the news and you look at the data and you look at what's happening in economies around the world, and, you know, geopolitically and what's happening, you know, with war, and China buzzing one of our planes the other day, coming within 20 feet, and what's happening in Taiwan and what's happening in Eastern Europe. And, you know, it's just incredible what is taking place. And we have no idea what tomorrow brings or what we're going to wake up to. And this is why I'm so passionate to share with all of you the importance of preparing mentally, physically, spiritually, and financially. And right now, that is my goal. That is my passion. I hope one day things get better. I hope the economy comes roaring back and it booms and people are back to work. And I pray that there's quality jobs and incredible opportunity, and that we see the middle class coming back. My fear is that's never going to be a reality again, and that we are going to see the biggest wealth transfer on planet Earth take place. And if you're not on the right side of this transfer, you're going to lose. And we continue to see the middle class shrink and shrink and shrink and shrink. And if people continue to take on debt and buy things with money they don't have, as this economy worsens, their standard of living is going to erode even more. And they're going to go from middle class to poverty, and we're going to see many people become homeless and never be able to come back. We're going to see people wiped out in these markets who are never going to come back. We're going to see less opportunity. This wealth gap is going to continue to widen. The opportunity gap is going to continue to widen, and it's going to be much harder for the average person to retain that middle class lifestyle. And if you are going deeper and deeper into debt, you're going to be lucky if you're just poor, because so many people don't realize, because they're driving a car right now, they're eating, and the lights are on at their house, and, you know, they're keeping up with the credit cards. Many of these people don't realize they're going to be homeless at some point, and they are completely unprepared to be homeless. They don't have the skill set to survive, and they're continuing to take on major risk. Be careful, ladies and gentlemen. Please be careful out there. Get your financial house in order. Get your spiritual house in order. Do whatever you can right now to put the odds in your favor. Get the side hustles, sell things, make extra money, invest in yourself. Continue to absorb as much knowledge as you can. Do your due diligence, do your homework, and be aware daily of what is taking place out there. And remember, a lot of this data is rigged. It's manipulated. It is much worse than you're being told. I'm going to leave it there today. God bless you all. Thank you for the prayers. Make sure that you share this video, subscribe, and hit that bell notification so that you are alerted with the newest videos. God bless all of you. Have a great weekend.